I am reminded that Texas is a great place to live when I come up here and forget to bring a coat in early October. Right? For everybody that know, I'm in Boston for the Maps Coach and Fall Mastermind. So it's beautiful, but it is a little chilly. So, all right, Jim, what's the overarching message we need to know?
A lot of things are starting to change. I think that's the biggest thing that we're going to see, and we just have to be prepared for. And again, as we're doing business plans right now, you need to take that in consideration. And whatever you were doing, do more of it. Do 25% more of it.
So let's talk about that. So
yeah,
if the activity level, like I always use the analogy of at the pace my feet were moving, right? That's how fast I was doing phone calls or door knocking or whatever activities I did. If that same pace would create me 75% of the success it might have created a year ago, what I'm hearing you say is I got to kick up the pace.
Yeah, absolutely.
So maybe I need to do 125% to get the same results I got a year ago. Maybe I gotta run that much faster, right?
Yeah, and if we're real about this a little bit, the last year or two have been really good for us, right? I think we were able to do, in some cases, more with what we were given, right? And so I think that allowed some agents to take a little more time off, to leave the office a little early. We had an abundance out there. Not everybody, but there was a good sense of that. And we were happy. This is where when the market takes a turn, you have to take the market for the good and the bad, right? And so when the market takes a little bit of a twist like this, we have to be ready to go into it of, all right, we had some good times here. It's time to buckle in a little bit more and stay those extra hours. And there's probably going to be a little bit where you're going to be sliding in right at dinner time or in the middle of dinner, but it's what comes with the job.
Yeah. Well, I think you got to go have a conversation with the people you love and trust at home and say, hey, listen, I'm going to have to put in a little extra effort right now. So our lifestyle doesn't necessarily change. And that's okay. Just get their buy-in, right? Like, but where somebody asked me the question yesterday, she said, what are you afraid of right now? And I said, actually, I'm not afraid of anything except the agents that need to kick it into a little bit higher gear that are still living on the high of what I call the excess coming out of the pandemic, right?
Yeah, that's probably one of the things. You're exactly right. If I'm being honest, when I look around at different agents and I see there hasn't been any behavior change yet, it worries me, and it worries me a lot. And I know it's easy to hear these things, and then you kind of sit and go, but things are okay right now. We're always playing ahead for 3 months. In 3 months, I'm afraid you're going to be speaking a different language, right? We're going to be singing a different tune. We're going to, whatever you want to say, but it's going to be drastically different. And if you haven't started preparing now, it's October 4th. We've already started the new year.
Yeah. It's not going to be bad.
No.
It's just going to be different. And, my mother used to always make fun. You think money falls off tree? Well, it might have fallen off some trees over the last couple of years, right?
Yeah.
And now we got to actually go shake the tree, right? It's not just falling, right? We have to go plant the seed. We got to go harvest the grain. We've got to go do all the analogies that it takes to go build a really good business. And this is where we're hoping in this call, we're giving you the leadership message of, hey, we're going to show you numbers, and sometimes they look good, sometimes they don't look good, but here's the message. Go get your feet moving a little faster right now, and you'll be really thankful you did it come January, come March next year. All right, you want to pop up the numbers?
All right. Yeah, I need access.
Oh, here, sorry. There you go.
Perfect. All right.
All right, so what I see is an interesting thing. Active inventory in almost every county went down this month or this week, sorry. And if you'll scroll to the right just a little bit, so we got 143 active inventory, but if you go down and you look, we expired 11 listings. Okay. So there were 180 a week ago. We know 11 fell out, like 11 didn't sell and came off the market. So that puts us at 169. So that says 26 listings sold, but we didn't replace it with new listings.
Mm-hmm.
So then the inventory all of a sudden is now going to create a little bit of a tighter scenario in most counties, and it's interesting to see. Now, if you look at solds, we sold 52. Great. End of month, we expect to sell quite a bit, but at the end of last month, we sold 74. And the end of the month before that, we sold 90.
Mm-hmm.
Yeah, it's going to be lower in September than the summer. There's a seasonality to that. And we're expecting that, but I don't necessarily see those numbers tanking, but it is a little bit interesting with the inventory coming down this week. What do you see?
Yeah, kind of the same thing. I was looking at it and I wanted to see, where we were looking for October versus what we ended up doing here in September.
Yeah.
There's just so much to take in right here with this active number, because theoretically, if our inventory is going down, how much more has our demand gone down? So trying to figure out what the prices are going to do, right? So has our demand gone down with this? And so we're staying even, and we can pretty much expect the numbers to even out? Or has demand gone down further than this, and prices were going to continue to fall just a tiny bit? We talked about it last call, going down 1% or 2%. It's to be expected. It really is. But the other thing I was looking at is, if we're looking at our pending and what's gone under contract, trying to figure out what we did the month before, how it equated to this month. We're in this between like 2018 and 2019 market right now, which good market. I was hoping that there was going to be kind of this slowdown, and I had the screen open looking at this earlier today. So these were solds in Rockwall County in August, and here we felt that's normal. This dip was normal. I was hoping it would kind of halt right in here and not be so deep, but you can go to each previous year, and that drop is going to be right in there. So it's a really normal drop. I think we're going to be back in our seasonal pattern. I was hoping that there would be one more irregular year, and we'd kind of have some ups and downs, kind of like we did the last 2 years. But it looks like we're going to be kind of in this 2018, maybe in this 19 market. So next month, this 174 to 150 area, probably right in that 160. So again, the numbers look good. We're just kind of returning back to where we were pre-pandemic.
Yeah. So jump over to Collin County. So this market's really interesting. So you see, we had 943 active listings a week ago. We have 100 less this week. How many listings expired? No, one more down. Basically, 10% of the inventory expired. Now, should that happen? Is that a pricing thing? Do you think there's not enough buyers out there? Or do you think these are unrealistic sellers that are still trying to get summer prices?
I think it's the unrealistic seller and the agent that isn't paying attention. And when you're sitting down doing your price comps and you're looking past August and not giving a price decrease, you're overpricing the house. You're taking May, June, July numbers, but we clearly saw a 4 to 5% drop in that August through September timeframe.
So in this county, literally their 10% of their inventory expired and they didn't replace it. Which you got to think, how many people put new listings on October 1st? Probably not that many yet. I think they'll put them on at the end of the week, right? Like most big agents have a launch schedule where they launch it on a Wednesday or a Thursday, and they, that whole game. So maybe there's some of that, and we'll see a little uptick next week. But I find that really interesting that 10% of the inventory just expired. Now, should we go after expired listing? Maybe that's a strategy that gets your feet moving a little faster. Make sure you're doing the do not call and the TCPCA, whatever make sure you don't get yourself in hot water for calling people you're not supposed to call on the do not call, but it's still a strategy.
Yeah, I don't know that this means anything, but it is interesting looking back at some of the previous months now. You had the 65 that popped up out of nowhere last month, and then you kind of operate in this 48, 58 right here at the beginning of August.
But look at what happened to inventory, though. It went down a little bit at August, but in September it went up.
Yeah.
Right. So I just, we haven't really seen the expiration of inventory like we're seeing right now is probably the term, right? But look at solds, 355. That's pretty doggone healthy. Still a game.
Yeah, I know. I think if you're sitting in Rockwall County, you didn't see those numbers go up quite as bit. It's healthy to look at other counties and realize, okay, there are some normalcy still happening.
Yeah. So there you go. Where you want to go? You want to go out to the lake? So I find the lake interesting as well. The inventory, if you could scroll a little bit to the right, Jim, the inventory is holding at 83. The sales had a little bit of a dip at 13, which normally you would expect the end of the month to have a pop, but they stay pretty consistent. So maybe somebody forgot to teach all our agents at Cedar Creek that the rest of the agents always try to close their houses on the last day of the month. I'm just making fun, but the lake market, I would assume, slows down when the weather gets colder, right? But I also don't want to make those assumptions because there's still 83 active opportunities out there. And if you go back and look at the graph, I find it really interesting that the green line certainly shows a little bit of a downslope. So we can see that it's sloping downwards. Inventory, man, if you go back to summer or early summer, I don't know what exactly the number was, but I mean, we're pretty much equal to where we were at the beginning of the summer on inventory.
Yeah, no, that line stays pretty much right down the middle.
Yeah. So inventory is obviously the supply part. But if you look at the green line, it definitely has a little bit of a downslope. So I think that's worthy of noting. But once again, I think we're in a weird time period. It's 1 week's not going to tell an entire story right now.
No, not at all. It'd be a bad knee-jerk reaction if you operated that way.
Yeah. Well, Jim, you sent me a couple articles, some needs to know. You want to run through those?
Yeah. I looked at this as some good news, weird news, and kind of level-headedness, right? So good news. We keep on talking about jobs are coming, growth is coming. Just right across the lake, we've got a huge business park coming in Rowlett. So as we're looking at the Metroplex being this warehouse distribution center, having something like this come in is it's kind of a head turner. So this is coming off of a Bush and Merritt. So right there on the borderline of Garland. But there are so many supply chains being, I think, improved. If you look at what's been happening with things coming into dock in California. There's a lot of companies that are buying land here, going back, reinvesting in California, and increasing the supply chain. And so having something like this in our backyard, it's going to bring in a ton of new jobs. It's going to bring in a ton of growth to the area.
So when
So
commercial
yeah.
development's going on, it always is a good thing for housing.
Yeah.
I remember there was a good decade where you didn't see a crane in downtown Dallas when you went downtown, right?
Yep.
You see cranes everywhere right now. And I think that's just a positive thing for economic growth, right? Like it brings jobs, it brings money, it brings other businesses, they bring restaurants that people got to go eat at, it brings dry cleaners, people got to go get their clothes. I mean, economic development's a big deal, and it's a healthy thing for a real estate market.
Yeah, no, absolutely. There's excuse me, there's nothing else that I'd really add into this, just that our metroplex is continue to expand, land is continuing to decrease, which, like you said, it doesn't just help out mom and pop stores and everybody else, it also brings values up across the board. But this happening in our backyard, I think, is a really big deal.
Oh yeah.
Then I sent this one over to you, and I had to open it up just to make sure I wasn't misreading it, or it wasn't anything that was unnecessary. And it is just what it is. They have 7 neighborhood Walmarts around the metroplex that are going up for foreclosure.
I think there's a shift in, and this is uneducated opinion, I'll disclaim it. With there is a shift to supermarket shopping, and this model for Walmart is almost a dying model for these neighborhood stores, because the Super Kroger, the new HEB going in Plano, you got all the big grocery stores that almost try to take luxury and make it in a grocery store, which is interesting. Is the trend right now, right? And that's where people want to go shop. So it doesn't shock me that these are going up for foreclosure, but it is a lot of real estate.
Oh, absolutely.
Yeah.
I thought about Albertsons whenever I first read this, and you kind of saw the same thing that happened with them, was it late 90s, early 2000s. But I look at Rockwall, and Rockwall's one of the ones that's mentioned in here. And if you think about where it's located in Rockwall, if they did this in each one of these areas where they put them kind of on the backside of all these communities, and then you have all these Krogers and HEBs coming in, I don't know that the person that goes to Walmart was just looking at the Walmart neighborhood center the exact same way. So I'm not sure it was just a great model for them. But it is interesting as the Fed is doing what they're doing, and we're seeing the market react, and now we're kind of seeing it on the commercial side. I don't know that anybody really knows that if this is kind of the first that we're going to start seeing, as we're seeing a little bit of attention, maybe a little bit of a recession happening in the economy. Again, not anything to panic about. It's just, we got to watch out for the signs that are in the market and adjust our business.
I would agree with that. And I would throw an asterisk on that. Personal opinion again, I think these neighborhood Walmarts are a bad business model for certain towns, right?
Yeah.
And so I don't know that I would totally define this as the signs of an economic debacle, but anyway, we'll leave it there. My opinion.
Yeah. No, I don't think it's a 2008, 2010 situation at all.
Yeah.
Yeah.
I mean, you think about like what happened to Kmart. Kmart had this model, and the consumer habits shifted. They wanted Super Target. They wanted, all the big box malls. They wanted all that stuff, and it killed the Kmart brand, right?
Yeah,
I think Walmart's a little bit similar, right? Like their brand, they need to know who their target customer is and stick there, right?
absolutely. Yeah, every business has its cycle.
All right.
All right. And then heading over now, this was one you don't want to get caught up in the headline of being just Fort Worth, Arlington, because this is a bigger metroplex type of analyst. The only thing that doesn't translate well are kind of the average prices in the area, but the drops are real similar. But this is coming from, excuse me, Texas Real Estate Research Center. And as you get down here into some of the questions they were asking them, I think it's pretty spot on with where he's saying this is where the market is. This is kind of where we're heading. And so, again, as we are starting to build these business plans, knowing what to expect from what inventory is going to do, what our home prices are going to do, we need to be able to map that way forward. And so as they're asking them, do you see the inventory climbing? Not in the 6 to 8, not for another, or not in the next 6 to 8 months. Again, looking at the 2019.
Yep. I think honestly, the biggest thing here is our market is almost mirroring what 2019 did. Right?
Yeah. And so as we're looking at it, if we go back and we can absolutely see what to expect out of 2019, right?
Which, by the way, we all made a lot of money and it was a good year.
Yeah, no, absolutely.
Yeah.
But it can cause a little bit of fear because this is one of the few years that we saw this really strong dip right here.
Yeah.
Right. So going into the fourth quarter, this is absolutely the time where you might have taken an extra vacation, stay in the office, get in the office, and just kind of trudge through it like we were saying earlier. And you can battle through this. You can be the one that's owning these sales, this inventory.
There you go. So my best analogy, Jim, is the duck on a pond. Above the water, the duck is the coolest, calmest, collected animal in the world. Beneath the water, its feet are doing this. And that's what we got to look like. We got to be cool, calm, collected professionals. But beneath it all, we got to get our feet moving as fast as possible. That's the message.
Absolutely.
There you go.
All right.
Thank you, sir. Happy Monday.
Happy Monday. Have a good one.
Bye, guys.